Hello, Miss Liu. Today, our group is going to present about our research of post-merger Berhad. My name is Wen Shok-en.
My name is Li Lin Wei.
My name is Namiki.
And my name is Lim Ziqi.
I'm Melissa.
My name is Tan Jihan.
Okay, so now I'm going to talk about Part A Introduction. Okay, Post-Malaysia Berhad is well known as a sole license and national postal service provider in general postal service across the country with a history of over 200 years. Furthermore, Post Malaysia transformed to a company which also provides logistics, retail, aviation, and other services rather than a traditional company that only offers parcels and meals delivery. However, Post Malaysia is considered as a postal company which deliver parcels more than deliver meals in these days. This situation occurs due to the highly demand of parcel delivery than meals delivery services. It is also a result of combination in market freedom and solid market strength, which creates a brand new business operation method. In addition, Post Malaysia also owns the largest delivery and touchpoint network in Malaysia. For example, Post Malaysia has a record of delivering mails and parcels to over 10 million addresses around the globe, which utilizes touchpoints network that exceeded 3,500 and over 350 self-service terminals. Moreover, it also interlinks the country with over 200 postal operators nationwide. Post Malaysia also been added into Bursa Malaysia with a market value of Rm 0.52 billion due 31st December 2021 in September 2021. Next, the statistic shows that the postal segment is considered as the principal activities of Post Malaysia because it contributes a total of Rm 1,520.38 million, which is about 69.3% of group revenue. For instance, the postal segment included the posting of internal and overseas mail, renewal of licenses such as driving license and road tax. Moreover, payment for utilities and insurance can also be done at the post offices. Postal segment can be divided into four parts, which are mail, courier, retail, and international. Firstly, the mail from postal segment is where Post Malaysia offers domestic mail delivery services to 10 million addresses across Malaysia and over the globe. Besides, the courier segment provided an express package delivery around the country through their post office or online shipping website. Moreover, the retail segment included financial services that offers an extended operating hours and 7 days operations for the ease of customers. Lastly, the international part is where Post Malaysia offers cross-border mail and package delivery services via their global postal network. Next, the logistics service earns about 15.8%, which is Rm 345.89 million, and the aviation service contributes 9.8% of the group revenue, which is a total Rm 216.05 million. Besides, the other segment service, which are the subsidiaries of Post Malaysia, contribute 5.1% of total revenue, which is about Rm 111.71 million. First and foremost is the Post Aranu Serdian Berhad, which is known as a one-stop gold center, operates 80 outlets located nationwide with the service of Islamic microfinancing. For instance, Post Arando also offered purchasing, selling, and safekeeping physical gold and gold jewelry. They focus on enhancing customers' experience by applying online payment services, which is a way more convenient on second-hand gold trading. Next is the Data Post M. Sendirian Berhad, a mailing solutions department which offered enveloping hybrid mail service, bulk mail processing and delivery, as well as data processing. They also focus on providing digital services where delivering notices or electronic statements through email or SMS. Furthermore, is the Post Digicert Sdn Berhad, an organization providing digital certificates which are legally certified by web trusts for certification authorities. The certificates are a digital identity used in electronic commercial for security purposes. Their focus is to promote the utilization of digital signing, which is interlinked with the latest global industry standards. That's all from me, and I'll pass to my groupmate Makey.
Thank you, Suan. Now I'm going to talk about the accounting concepts. The first concept is the materiality concept. The definition of this concept is a accounting principle which states that all items that are reasonably likely to impact the investor decision making must be recorded or reported in the detailing in our business financial statements using the GAAP standards. Based on the annual report 2021 of the Post Malaysia in the page 132, the company is entering the impact of financial change on the public based on the company's financial statements and has the returns are concerned on GRI, so the company will maintain sustainable development and profit growth by cost or control allocation. The next concept is the historical cost concept. The concept is a measure of the value used in accounting in which the value of an asset on the balance sheet is recorded at its original cost when acquired by the company. The concept is based on the going concept and which is contain the price of the historical cost. To refer the report at 2021 annual report page 169, they are showing the base of the measurement of the Post Malaysia and they are complete the root with the concept as they are based on the historical cost and calculate the value of the financial statements. The third concept is going concept. This concept is aimed to the company which assume that the business will continue to work in the visible future. Although the company which is going to bankrupt, the company also put the available assets in a warning stage. By referring to the stage of value adding and volume dispersed in 2021 annual report, the company has assessed where the company cash flow is satisfied to meet its current liability assuming it will continue to operate. This is one of the social responsibility in case of the hypothetical business. The fourth concept is consistent concept. This concept is that the company which needs to compile the same formats with the financial statement. To consult the outlook in 2021 annual report, page 43 is showing the companies will introduce simplified funding of the customers. Application in the same method. This reduces the chance of the errors in financial accounting. For example, how prone to the financial errors can occur if two different methods may appear the inconsistent. The last concept is that the accurate concept. This concept is requiring to the recording values when they are earned and not when they are received in the cash, and recording expense when they are incurring and not when they are paid. The concept which needs the company to put the incomes and expense in the same base, then the value of the same timelines will be recorded to the same year financial statements. To refer the consolidated statements of the change in quality of 2021 annual report of Post Malaysia, page 232, the company is including the accounts which should calculate for this year and reduce the expense of the prepaid for the next years in the financial accounts. To sum up, the Post Malaysia is totally contain this concept. Now I'm going to pass to our crewmates, Malaysia.
Thank you, Miki. Now I would like to talk about a chart of account. Under chart of account, the first one I would like to talk about is asset. An asset is a resource owned by organization which provides economy value or control with the expectation that it will provide a future benefit. One of the asset is motor vehicles. Motor vehicles will be used by the company as a transport provider to logistics to ensure that parcel will be sent out. The other one is freehold land. Freehold land, the property belongs entirely to the owner without control from the government. Next. The second one is liability. Liability is the company owes, usually is money, and will settle over time through the transfer of economic benefits. Under liabilities, there's hire purchase, buying expensive goods where the company pays down payment and later the balance and interest will be paid in required time. For example, Post Malaysia purchased large amount of motor vehicles to provide services like send out mail to customer. The other one is bank overdraft. Bank overdraft is to help company for daily expenses and transactions. Next. The third one is capital. The capital of the business is the money and assets available to use for daily operation and to fund for the company future growth. Under capital, there is share capital. Share capital is one of the way to raise money by issuing share in stock market. The other one is reserves. Reserves is part of business profit to pay for future obligations. Next. The fourth one is income. Income is profit retained by an entity to pay off all relevant expenses. It is recorded in the company income statement. For income, there's revenue by services. The main services provided by Post Malaysia is postal, aviation, logistic, and others. There's other income, for example, rental. Next. The fifth one is expense. Expense is the cost incurred by the company to generate revenue. There are two main types of expenses, that is operating expenses and the other one is non-operating expenses. Operating expenses is a direct cost that related to the company operating activities, while non-operating activities is not directly related to the company operation. Under expense, there's finance costs. One of the finance costs is leasing costs with contract on machinery and office equipment. And there's other expenses is taxation. Thank you. That's all I want to talk about. Next, I'll pass it to Jehan.
So now I'll be talking about the relevant documents to our study on the financial statement of Post-Malaysia Berhad. Firstly is tax invoice. Tax invoice is an invoice issued for taxable supply of goods and services. So for the tax invoice we have found, it has the description of the items bought, its quantity, and the amount that is taxed. I'll take the left tax invoice for example. So this tax invoice is from Post Malaysia Berhad to Jill Gray for the shipment of an international parcel weighted 2 kilograms. It states the tax rate and the amount that is taxed. It also states the total amount that must be paid after the tax. The next type of relevant document we found is cash receipt. A cash receipt is a printed statement and acts as proof of the amount of cash received in a cash sale transaction from the seller to the buyer. The name is cash receipt for this document, so this transaction is therefore paid by cash. There are 4 cash receipts over here, and I'll be only talking about the first one. This cash receipt is from Post Malaysia Berhad to Tyler John for the purchase of a 60-cent stamp. The next type of relevant document is sales receipt. A sales receipt is a transactional record that the seller issues at the time of sale to verify the provided product or service and the amount the buyer has paid. It is a document confirming that a customer received the goods that he or she paid for. So for this sales receipt, John Blake is proven to have paid for 35 brown envelopes to Post Malaysia Berhad and have received them. The next one is credit note. A credit note is a receipt given by a shop to a customer who has returned goods, which can be offset against future purchases. So for this credit note over here, Post Malaysia Berhad has returned 34 white envelopes and 28 carton boxes to Cosmart Sdn Berhad, amounting to a total of 85 ringgit and 70 cents. Moving on is delivery note. A delivery note is a document that accompanies a shipment of goods. It provides a list of the products and quantity of the goods included in the delivery. The delivery note is issued by the seller. It won't list the price of the products. It only states the products and the quantity of the products. The delivery note over here is issued by Cosmart Sdn Berhad to Post Malaysia Berhad. This delivery note will accompany the shipment when the items listed below is shipped to Post Malaysia Berhad. Next is purchase order. So a purchase order is an official document issued by a buyer committing to pay the seller for the sale of specific products or services to be delivered in the future. The advantage to the buyer is the ability to place an order without immediate payment. The purchase over here states that Post Malaysia Berhad will pay an amount totaling to 10,784 ringgit and 70 cents, including 6% of service tax to Cosmart Malaysia Sdn Berhad. The last type of relevant document is payment receipt. A payment receipt, also known as a receipt of payment, is a document issued from a business to its customer when they have received payment for provided goods or services. I'll be talking about the payment receipt on the right. This payment receipt clarifies that Post Malaysia Berhad has received a payment of 6 ringgit and 1 cent from John Low, including 6% of sales and service tax for the shipment of a 0.5 kilogram parcel. That's all for the relevant documents regarding our research. Now I'll pass the floor to Zigji.
Thank you, Jehan. Now I will continue to the part of ledger entry. The general ledger is the foundation of a company double entry accounting system. General ledger account encompasses all the transaction data need to be produced in the income statement, balance sheet, and others financial report. General ledger transactions are a summary of transactions made as general entry to sub-ledger accounts. There are some examples of asset. The example of asset is building, plant and machinery, motor vehicle, furniture and fitting, and others. Next, liabilities, we have hire purchase liability, Islamic term loans, post-employment benefit obligation, trade payable, others payable. Next, the capital, we have share capitals, sales, and other incomes. The last one, expenses, we have selling and distribution expenses, administrative expenses, and others expenses. And the last one, financial costs. Next, I will continue to the payrolls entry. Payrolls is the compensation a business must pay to its employees for a set period and on a given data. The payroll process can include tracking hours, works for employees, calculating pay, and distributing payments via direct deposit or check. However, companies must also perform accounting and record keeping and set aside fund of EPS, social, and tax. The payroll entry have 5 accounts is wages and salary, wages control, EPS payable, social payable, income tax payable. Next, I will pass to my groupmate, Lin Wei.
Thank you, Ziqi. Now I'm going to talk about correction of errors. First, I'm going to talk about errors of omission. Errors of omission is the word transaction that are omitted from book. That means the omitted if you forget to record. As you can see the question, the purchase of computer by 10,000 by cash has been omitted from the book. That means they forget to record. So you open two account, computer account and cash account. Computer account debit side write cash 10,000 ringgit and cash account credit side computer 10,000 ringgit. Now, errors of commission. Errors of commission has been paused. This error paused into a wrong account of the same category. As you can see, the payment for rental expenses 5,500 to Ali, but error entered to Zahira account. So we have to open two account. One is Zahira account and another one is Ali account. It is because actually the pay and rental expenses to Ali, but you pay into Zahira account, but they record into Zahira account. So Zahira account credit side must write Ali 5,500 and Ali debit side write Zahira 500 5,000. Now I'm going to talk about errors of principle. Errors of principle means that the entry is paused into a different category. So as you can see the question, the purchase of vehicle is RM 50,000 is debited to the purchase account instead of being debited to a vehicle account. Actually, when you purchase something, your purchase account is credit and the things that you buy will be debited. So you open two account. One is vehicle and another one is purchase account. Vehicle debit side write purchase 50,000 and purchase credit side write 50,000. Next, I'm going to talk about errors of compensating. Compensating of error. Compensating of error is by chance. Not every time you have this error means that your error on debit side is the same error on credit side. Basically, there's two transactions have no relationship to one another. So as you can see the question, rental income account is overcast by RM50. So as the wages account, that means overcast is you calculate more, that means you pay more. So we open rental income account and wages account. So as you can see, I'm going to pay 600, but I pay 650. That means you get, that means you take 650 minus 600, that means you get 50. You pay more 50 ringgit on it. So rental income, debit side right wages 50 ringgit, and wages account credit side right rental income 50 ringgit. Now I'm going to talk about errors of original entry. Errors of original entry is a wrong amount is recorded, then the whole amount is correct but with a wrong number. As you can see, the question shows a purchase of 600 from packaging paper manufacturer Ltd has been entered in the purchase journal and post to the ledger as RM 550. That means actually you purchase a 600 things, but when it post it to the ledger is 550. That means you record it a wrong number. So you open two account. That means you open a purchase account and a packaging paper manufacturer account. That means it's your creditor. So you get 600 minus 550. So you have to pay more of 50 ringgit. A purchase account, debit side creditor must write RM50, and packaging paper manufacturer Ltd is your creditor. Credit side must write purchases RM50. Now I'm going to pass it to my group mate, Lim Ziqi.
Thank you, Ling Wei. Now I will continue to the part of trial balance. A trial balance is a worksheet with two columns, one of debit and one of credit. The ensure of company bookkeeping is mathematically correct. The debit and credit included all business transactions of a company over a certain period, including the sum of such accounts as assets, expenses, liabilities, and revenues. Debit and credit of a trial balance must tally just like the example in this slide to ensure that there are no mathematical errors. This is all our presentation. Thank you, Ms. Liu.